Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily interactive webinar filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com weekend update show. Hope everybody is doing okay. Hope everybody is having a great summer. Hopefully everybody's doing very, very well. Trading, just really, really good action. We'll talk about that in a few minutes. Just a quick announcement. We've been showing the power of the pivot for a very long time, for an absolutely very long time. There is absolutely nothing random about this. It's a very, very specific process that nobody on the planet trades but us. I mean, literally, people trade pivots. I promise you they don't trade it this way because this is something that I created about 4.5, 5 years ago. And as you guys see, for those of you guys are following me on different various parts of social media, especially people in the live webinar and all that good stuff, the Twitter feed. It's pretty special, okay? We are doing just a quick announcement, and then we'll move forward. I get tons of emails about all these different moving parts and all the different bells and whistles of why these things are so effective. And here's really the reality. We do a workshop once a year. We did our first workshop last summer, right? Last summer, and the dynamics of the theory have really expanded, and there's a bunch of new features and new add-ons that we've kind of picked up throughout the year. Okay, throughout the year, including the second entry who's been phenomenal, using a 5-minute correlation to the 60-minute chart to find the arbitrage. Really, really good. 5-minute variations of how to manage your trade from the difference from the old one. So there's several new moving parts about the theory, and if you again, I've been getting a lot of emails throughout the year. If you are interested in learning about pivots, and especially the way we trade them, save the date, August the 25th. It's a Saturday, okay? August the 25th. It is a Saturday. We are doing the PS60 workshop, okay? Everybody who is in the live webinar, it's completely included in your membership, so you don't have to worry about it then. And anybody who wants to participate, who's been curious about the pivots, who's been seeing me kind of play these things for a very, very long time, and just kind of need a new switch, kind of need a new edge, August 25th. August 25th is going to be the date. There will be an early bird registration. I don't want it to be a big, big event because I just don't want, I don't want a lot of people, I don't want a lot of people, I don't want a lot of people to go into the event and make it a circus. We want to make it as individualized, as personalized as possible. So we want to kind of limit the number of people attending. So we'll definitely get more information. We'll give you guys more information in the next couple of weeks, but August 25th will definitely be the date. So let's talk about the markets, right? Let's talk about the markets. Let's talk about our week, and let's talk about what could happen going forward. Number one, we're deep into earnings season, right? We're deep into earnings season. So far, a lot of bullish index action, right? There is a lot of correlation between strength and rotation. Everybody understands that. First, the bullish side, right? First, the bullish side. Number one, banks finally woke up, right? For those who've been trading banks for many, many months, and even trading banks for many, many years, or even traders who just said, you know what, I've had it with these banks. The market's at an all-time high. It's just, they just don't rally. They're just the absolute worst. They just don't rally, and I don't want to allocate my time. I don't want to allocate my mental equity into these things. Well, they finally woke up. They finally woke up, and this is a good 2-week run. This is a really, really good 2-week run of Goldman Sachs. We talked about this breakout 2 weeks ago at 229. JP Morgan, we were live on the Twitter feed talking about the 111 break. You can just see what happened here, the 111 break, big moves here. Citibank, again, a nice run off supply. And Bank of America, this is the one from just last week, confirming the 50-day moving average of 30-30. So it's very, very bullish, right? It's very, very bullish. that arguably the most important group in the financial spectrum is actually rallying. And that's doing very, very well for the Dow, right? Again, there's not a lot of, it doesn't take a lot of energy, right? It just doesn't take a lot of energy to get the Dow Jones Industrial up. There's 30 stocks. There's only 30 stocks. So the fact that the banks are so important, right? The fact is so important, and they finally woke up and actually giving traders the belief that these things will actually sustain any type of ability to rally is a good thing. And they're really, really holding up. They're really, really holding up market sentiment. Here's the other side of the equation, right? Here's the other side of the equation that I actually care about. Again, I don't trade the banks. I don't care about the banks. I trade high beta, right? I trade high beta. I trade the feel-good companies. And what I mean by the feel-good companies, for those of you guys who are first time joining us via StockTwits or YouTube or even Twitter on this update, I trade the feel-good companies, companies that hedge funds, mutual funds, retail love to own, especially in an upward bias. Netflix, Amazons, Googles, Facebooks, right? NVIDIAs, Teslas. I know, crazy, right? Teslas, Alibabas, Baidu, Roku's, Square, and on and on and on. And for me personally, and this is only my opinion, I think they are much more important from the trader's aspect of strictly mental capability of absorbing weakness and strength. What I mean by that is people feel really good when Apple is strong. People feel really good when Netflix is strong. People feel really good when Amazon is strong. Does anybody really care about Walmart when you're trading? Again, very, very important aspect of the economy, no doubt. But does anybody really care about Intel? They used to, right? They used to be a big market leader. Does anybody really care about eBay anymore? Does anybody really care about Ryder or Lowe's or Home Depot? Again, yes, you could be an investor of these companies, but the day-to-day basis, nobody's coming out, no professional trader is going to come out, especially in the intraday ranks and saying, well, I want to see what Lowe's is doing today. I want to see what Kohl's is doing today. And yes, again, Kohl's is cool. You could trade Kohl's and you could attempt to trade Walmart and Costco. And again, some of these names have actually been really, really good, right? And you look at Costco, big, big run. But trading Costco, right, is a little bit different than investing in Costco. And again, majority of the companies out there in the whole, macro universe, they all move, right? But 95% of them, even more, are not tradable. And there's a difference between tradable action companies and investable action companies. And stocks like Costco, although they've been on a phenomenal run, again, who can take away the run that Costco's had in the last year? But again, are you really turning around and saying, well, I'm going to look for a 60-minute confirmation to see if Costco can break down off this pivot? Probably not. And this is kind of where the disconnect, right? This is kind of where the disconnect comes in from the Dow Jones to the NASDAQ 100. And this is where sentiment right now, and especially going into this week, could start to form a nice wedge. And if you look at what the diamonds did, right, which is the ETF of the Dow Jones Industrial Average, you look at the Dow, right? You look at the Dow for the week. The Dow gained 1.6%, right? 1.6%. Very, 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 very solid move. The S&P 500 gained 0.5%. Here's where the disconnect starts to happen. And this is, again, goes to the theory that the stock market, again, you hear me say this every single week because it's true. This is where you see, and you see the evidence that the stock market doesn't exist anymore. Again, it's just a market of stocks. And this is when you turn around and say, well, how can the Dow Jones Industrial Average be up 1.5%? And the NASDAQ 100, right? Let's just talk about the Qs. And the NASDAQ 100 lost a little bit over 1% for the week, right? And this is where you really start to appreciate individual process. Again, you don't need to trade pivots, okay? You don't need to trade my style of trading. The way I think, it's not my way or the highway. It's your way. It's your comfortability. It's your process. It's the way you feel comfortable trying to put steaks in the freezer. It has nothing to do with me. So every single trader really needs to look at themselves in the mirror and say, well, wait a minute. Is my process at least correlating, forget about alpha, right? Is my process at least correlating to safety? And if that answer is no, you have to find a new process. If you're still getting your stomach in a knot right before you click the mouse, you have to find the right process. If you're still putting on a position and your first thought that pops into your head is where's my stop instead of where's my profit potential, you might think about getting a new process. And again, it has nothing to do with me. I'm not telling you trade the pivots. You could be trading anything you want. But the most important part is feeling enough comfortability. At the end of the day, you are super aggressive with your approach. You're super aggressive protecting your capital. And the most important part is you're doing technically instead of emotionally. So what do we have this week? What is making the market tick? Okay, number one, knee deep in the earnings season, right? Knee deep in the earnings season. Google did great, right? Google did great. Everything's great. All-time highs, right? Semiconductors, who would have thought, right? AMD, who would have thought? This thing was for dead. I was on a conference call years ago. I actually took AMD years ago, and I don't do this anymore. I took AMD short into numbers years and years and years ago. I couldn't have imagined a worse conference call ever. The only thing that didn't come out of their mouths was, we're closing our doors. And yet the stock, and this is when the stock was like at $4 or $5 or maybe $6, whatever it was. And the stock rallied that day. The only thing that saved that conference call was the fact that, well, we didn't close our doors. And you figured by now, Intel was going to, completely devour them. But it's a most amazing thing. You had good numbers come out of AMD. You had good numbers come out of Xilinx, right? Look at Xilinx. Good numbers come out of Xilinx. LRCX, which I traded on Friday, was absolutely phenomenal pivot. Had good numbers. And then you take, on the other side of the equation, you take Intel, right? The foremost authority on tech, on the semiconductor space, losing almost $4.50 in the day. So you had some good numbers, you had some very odd reports, and then you started seeing the feel-good stocks, right? The feel-good stocks, the cult stocks, the stocks that every trader, even if you don't trade these stocks, you're aware of, you use their products, you use their platforms, you're intimately involved exactly what they do. And again, you can't say that for a lot of the companies out there because, again, we don't use a majority of the companies out there in their day-to-day lives, but companies like Facebook, Twitter, right? Facebook, Twitter, Amazon, everybody uses Amazon, Netflix. I'm a diehard Netflix fan, baby. Best $8-9 I spend all month. But the most important part is you started to see a little bit sour results and you started to see sentiment kind of start removing themselves from bullish to the other side of the equation. Now, again, before we get into them exactly, somebody will turn around and say, well, look at the run Facebook has had. Of course it's profit taking. Look at the run Twitter has had. Of course it's profit taking. Look at the run Netflix has had. Of course it's profit taking. And yes, you could be right. Right? You could be right. Again, our opinions, guys, mean absolutely nothing. I am, again, for those who are joining us the first time, I am the king of the idiots. Okay. Number one, there is nobody bigger of an idiot than I am. Okay. So my opinion means absolutely nothing. The only thing that I go by is price action. If something is good, they're going to tell me it's good by bidding up shares. If something is good, but they're selling off the stock, it's not profit taking. For me, psychologically, it's the removal, slow maneuver, right? Slow removal of market sentiment. So what does that mean? I don't care where the stock's going to be 2 years from now. I don't care where the stock's going to be 2 weeks from now. I care about winning my interval. That's it. I don't care what the stock is doing, what it did, or what it's going to do in the future. I'm not Miss Cleo. I don't have a crystal ball. It's all about how can I take advantage? I'm not a bull. I'm not a bear. I'm an opportunist. How can we take advantage on the data that we collected, right? On the data that we collected and play it to the position that we can move it forward and use it to our advantage to have profitability in the trade. And that's it. And you started seeing the beginning of earnings season, again, starting to sell off. You had Netflix, right? You had Netflix started to sell off. Had that big, really nice day reversal on its earnings day, but starting to sell off. Can get out its own way. Facebook, right? Facebook, again, having a lot of different issues, more issues than I want to talk about, right? Big 2-day sell-off. When was the last time you saw a beta name lose 20% in one day, right? I'll wait. Big reversal again on Friday. We'll talk about that in a second, right? You had big reversal there as well. Twitter, again, a lot of people turn around and say, well, how come they haven't figured it out yet? Hell, I haven't figured it out yet, so why should they? Again, sold off as well. So you started seeing a lot of names, right? A lot of names that had big run-ups. And again, you could turn around and make an argument and say, well, okay, it's profit taking. Okay, but again, we don't care about what the reason is. We care about how we can profit from it. So big divergence. And going into this week, you kind of have to put on a sell sentiment hat. I'm not saying bearish, but a sell sentiment hat. I always collect data. I always have an opinion going to the day. Now, again, the day could play out completely different, right? Completely different from what I had planned. But again, I would rather be wrong 100% literally than 100% financially. Okay, you could always change your mind. Okay, but once your chips are in the middle of the table, as the casino would say, you can't get it back. And what I really started to pay attention to was, again, the obvious, the Facebooks, the Twitters, the Netflix. Okay, they missed, and eBay missed, and Intel missed, and blah, 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 blah. But I always like to see what the gorilla, right, what the big king of the jungle is doing. And here was Amazon, right? And number one, Amazon had for those of you who were just watching when Amazon reported, Amazon went literally went from 1850 to 1706 back to like 1890 or 1880, whatever it was, in a matter of like 45 seconds. It was the most craziest thing. It was one of the craziest things I've seen in a long time. But the most important part is it's not what it did, not what it did initially. It's not the point of what happened after they got all these big, big profit targets, 2,100, 2,400 from different brokers. It's what happened after. And the market has spoken. Now, again, you can turn around and say, you're crazy, it's going to 2,000. Amazon's probably going to 5,000, okay? So again, has nothing to do with my opinion is. I love Amazon. I shop on Amazon all the time. It's it's awesome, right? It's awesome. But it's awesome both ways, guys. Remember that. It's always both ways. So for example, last week I had a $6 pivot, right? $6 pivot on Amazon to the upside. And then, well, I don't care about it because there was a pivot on the downside. It's equally opportunity for the trader to succeed. And it's not where the stock starts, it's where the stock ends to formulate an opinion for the next day. And you could completely see, right? You can completely see that Amazon, okay, and despite their numbers, whatever the case may be, what Amazon did from the start and what it did to the finish. Now, again, taking profit taking out of the equation, I get it, right? I get it. We talked about that a few times in the last 5 minutes. Let's talk about where it's going next, okay? And going into this week, you really need to, especially if you're a retail investor, pay attention, right? Pay attention. Where did Netflix wind up? Where did Amazon wind up? Where did NVIDIA wind up? NVIDIA was strong all day on Friday. Where did it line up? Where did Google wind up? Where did these stocks wind up despite the bullish action, quote unquote, in the market, the Dow Jones, compared to where they closed? And this is how you start formulating an opinion. And going into next week, again, you could look at all the 60-minute channels. You could see, you don't need to be the world's greatest chart analyst. You could see the bottom of the ranges. Here's Tesla, here's Netflix, here's Alibaba. NVIDIA is very close to breaking down. You got Amazon, right? You see this little level here? Yeah, this is going to be kind of important for Monday. We'll talk about that, obviously, at Morning Strategy. But you can see visually, and again, with all these different different studies, RSI and MSNBC and all these different pitchforks and all this stuff, your eyeballs are the greatest test, okay? Your eyeballs are absolutely the greatest test. And you can see the bottom of the ranges are very, very close to snapping and snapping hard. And by the way, did you guys happen just to notice what happened at lunchtime? How aggressive these candles were at lunchtime? This is at lunchtime selling, by the way. This is all lunchtime selling. So market sentiment, at least for the technology space, it could be souring. And if they don't buy them, right? If they don't buy them, whether the earnings are good, bad, or indifferent, and there's quote unquote profit taking or back testing or any other adjective you want to use, if the bids go away, they will give us really, really good aggressive opportunities to the downside. So this week is pretty solid, very aggressive the last 3-4 days. Again, the Friday sessions, for whatever reason, right? The old wives' tale, the old wives' tale was, well, Fridays are boring. Everybody's in the Hamptons, da 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 da. There's no liquidity. Yeah, some of that's true, right? Some of that's true. But for the last 2 months, since quote unquote, the summer trading session started, we've seen some incredibly aggressive trading, just absolutely aggressive trading. And the most important part of that is it's very violent. Okay, when I mean violent, when you catch one of these pivots, you could see the aggression. There's like no resistance to these names. And let's talk about some of the pivots from Friday. A couple I wasn't in the room when they pivoted. That's why I didn't even put it into the private Twitter feed. There was 2-3 really aggressive pivots during lunchtime on the video Netflix that I wasn't even around that I saw after. It was insane. So obviously I couldn't put it into the room. But for the ones that we did, LRCX, again, semiconductor space, we put this out at 9 o'clock in the morning, half hour before the market breaks. LRCX, 186.70, 187 build, pre-market highs. Very, very important. I caught this thing for like 2.5 points within like a minute, and I was like, okay, how much? I haven't traded LRCX in so long. how much higher can it possibly go? Yeah, okay, it kind of went. So here was the, here's the pivot right here, and it just absolutely exploded, and this thing ran up like $7, which was absolutely amazing. For those of you guys who caught it, I know Maurice in the room joked about it. He goes, "Oh, I messed up. I only caught 4." Yeah, kindly translate. If you're upset with 4, kind of give me the other couple bucks. I'll no problem taking it. Amazon, again, we talked about Amazon. We talked about why these pivots are very, very specific. And again, it's all about strategy. It's all about understanding why stocks stop where they do, right? And when they get confirmed, usually good things are going to happen. So this was at 10 o'clock in the morning. This was 10 o'clock in the morning, and we talked about Amazon just held 1848. Again, that becomes the line in the sand. If it builds below, can flush. Now, why was 1848 the build on Amazon, right? Why was that the line of the sand? So here's the Amazon 60-minute chart, right? So here's the Amazon 60-minute chart. This first reversal candle, the low is right here. Everybody see this, guys? 1847.65, right? 1848, and then stock bounced back up. And once it confirmed, right? Once it confirmed, I mean, this was just an absolute death blow, and all the way down to 1806. So you can do the math. Pretty aggressive move there. Congratulations to all you guys who caught that as well. And look, I have no. I mean, for those of you guys who've been watching, especially just the weekend updates, you kind of know my opinion about Tesla. And what's there left to say? Again, there is no bias. I don't care which way the stock's going to go. It's either going to build a range to the upside or it's going to build a range to the downside. It doesn't make a difference. Once that range is confirmed, that's where the aggressive nature starts. It's not your opinion. Again, do I think Elon Musk is a genius? Yes. Do I think Elon Musk is out of his mind? Absolutely. Do I think Tesla is a beautiful car? I do. And again, in the suburbs, especially in New Jersey, there's so many people, and they're not replacing the Range Rover, right, or any type of Rover as the kind of the family vehicle, but they're getting pretty close. Especially for you guys who live in New Jersey, you can see there's Teslas on the road all over the place. And again, beautiful car. Again, they have some sort of financial issues, possibly building up hatred for Wall Street hating Elon Musk. Yeah, maybe all these things. And again, if their next model comes out with a steering wheel with three wheels or even an engine, I don't care. I'll trade long, I'll trade short, because again, I haven't come across of a trading vehicle, pun intended, a trading vehicle in many, many years as good as Tesla. And again, we tweeted this out pre-market. Look at the time. Pre-market. Today's ranges, 311 to the upside, right? 303 to the downside. There's nothing mentioned in this message, right, that, financials, Elon's nuts, Elon's a genius. It's all about price action. And again, you could tell why. Here's Tesla, right? Here's Tesla. So the upside right here, right? The upside right here was 310.70, so we rounded it off to 311. The downside right here, this whole range over here was 303.50. Again, we rounded it down to 303. And once it broke, I mean, what's there left to say? Again, congratulations to Vinny. He bought, when the stock was at 302, he bought the 295 puts. I hope I'm not putting you on blast, Vin, but great job. I think he bought the 295 weeklies for 11 cents. And then these things hit like 80, 90, I think 80, 85 cents, something like that. So absolutely incredible job. Big sell-off. We'll talk about Tesla going into this week. And again, not everything needs to be a pivot. Just understanding the way the market moves. And again, you can see, I love this GIF, by the way, Tesla crashing. It's one of my favorite GIFs. But again, not everything in trading is a pivot. Sometimes just common sense. And again, we talked about this at 9 o'clock in the morning. Facebook, watch a green to red short. If it does, it could get hit again. Again, Tesla lost over 20% the day before. You know the sell bias is not done with it. Not only do you not know the sell bias if you're not done with it, if you need more clues, it felt like a million shares on the bid. If you guys remember the previous day at 175, and this is on SSR, this is short sale restriction. And they went through that 175 bid like it wasn't even there. Okay, so you knew the sell bias continued. You knew all the problems that Facebook potentially could have down the road continued. And Facebook opened up $2. And just like that, went green to red. And for those of you guys who are new to trading, who don't understand what green to red is, so Facebook closed, I think it was like 176, whatever it was. And it opened up. It opened up above it. Once it went through the previous day's closing price, that is the terminology for green to red. And once it went red, and you can see it went red and went really, really red. And you can look at Facebook shares. Facebook, it got hit, man. It got all the way down to 73. So this thing got really, really hit. I mean, the big move. So again, not everything needs to be a pivot. Not everything needs to be this rocket science way of trading. Sometimes it's just common sense. If a stock is weak and it opens up strong, the chances of it going red again are pretty high up. If the stock is strong the previous day and it opens up weak, there's a pretty good chance it's going to go at least green one time. So not everything needs to be a pivot. Sometimes, again, it's all about experience. It's all about trading the markets for a very long time. But sometimes the most simplistic trade is the obvious trade, and the obvious trades are there. Just a lot of people, unfortunately, don't take advantage. So going into this week, guys, going into this week, again, just from beta, okay, I like the sell side on beta, okay. Going into it, again, I don't know what's going to happen Monday, but at least my first notion, right? First notion is, I like what I see. I like what I see. From these downside channels. I like the fact that they sold off Amazon into decent numbers. I liked how they consistently can't rally Netflix no matter what happens this whole week. I like the fact that Tesla has put in its lowest close in this whole formation. I like all these things. Now, again, the only curveball is some of these companies haven't reported yet, right? We still haven't seen Tesla earnings. I believe they're on the first. We still haven't seen Alibaba. We still haven't seen NVIDIA. We still haven't seen Amazon we saw, blah, blah, blah. So, I mean, there's some other names that are still out there that haven't reported, so I don't want to get too aggressive on them, but I will trade them into the intraday channel. So let's talk about some ideas for Monday. Let's talk about some ideas for Monday. Let's start out. Let me just get this up so I can just see what the hell I actually charted for this week. I'm not going to talk about everything, but look at some names I like for Monday. Look at the downside on Amazon. So, again, I'm not bearish on Amazon. It's just for trade. You can see the bottom of this channel here, right? The bottom of this channel here is 1806, especially for your option players. Actually, right here, actually, you know what? Figure out 1806. 1804 was the lowest candle on this chart, right? Lowest 1804.50, 1805. Yeah, guys, let's watch Amazon. Let's watch Amazon for Monday, or actually any day this week. This is a valid channel. If it starts building below 1804, especially for your option players, you could get a move all the way down to this channel here of 1790. So definitely keep an eye on that. Let's talk about Tesla. This is, look at the chart, right? Look at the chart. This is the lowest close, right? This is the lowest close in this whole formation. The lowest close, not the lowest print, the lowest close. Look, if Tesla starts building below 292, you can see this on the daily chart. You don't even need to see it on any other interval. If Tesla starts building below 292, this thing could get hit. I mean, will this thing get hit before earnings? Probably not. Again, we don't know. We don't want to forecast, but this becomes a very, very important area. Definitely keep an eye on the 292 area on Tesla. Obviously Twitter and Facebook, they're shorts. I mean, what else do you want to say? They're shorts. If you're in the camp that believe that you could sell stock into supply on any dead cat balances, of course you can do that. But again, Twitter, just see Facebook. If Twitter opens up on Monday and the stock goes red on the day, it'll probably get sold more. I mean, it's the same play. Again, Wall Street trading is not creative. It does the same thing over and over again. You just have to pay attention. It's sometimes just easy as pay attention. So I like Twitter. I mean, I like Twitter. If it gaps up and goes red, it's a short. If the stock gaps down, right? Well, it's a short opening range lows on the first confirmation channel at the 10 o'clock lows. So I'm watching that as well. I kind of like Xilinx. So this is called a second day play. Had really good earnings, right? Had good earnings, had a big move, and then it rested. It rested on half the volume. You can see here's the big volume bar up, half the bar the next day. It rested. It touched and held the rising Bollinger Band, which again, for all you guys who will be attending the PS60 workshop, you'll see a lot of these. You'll understand why all these things make a really big difference in your trading. Even if you don't trade on the 60-minute channels, I'll show you why. I like this thing. If it opens up red and flushes, right, washes out in the morning and starts going red to green to the upside, you could see a nice move back up. Same thing with Qualcomm. It's the same chart, same play. Same thing with Qualcomm. Same thing with Xilinx. So keep an eye on that as well. And I kind of like this Huya. You guys can see, obviously my bias is to the sell side, but there's going to be a lot of pretty good. There's going to be kind of a lot of pretty good upside potential as well. I kind of like this Huya. If it starts building above this 10-day moving average, roughly around the 3620 area, right? If it starts building around 3620, you could get a very aggressive move. So that's it, guys. That's it. So for all you guys who finally are ready to get knee deep into the pivots, again, this is the best time. Again, this workshop's only once a year. Obviously, we do this in the live webinar, but August 25th, save the date. There will be an early registration. We'll give out some more details in the next couple of days, and it's pretty good. I mean, as all you guys obviously in the live webinar and on the Twitter feed know, works pretty well. So guys, have a great night. Enjoy your weekend. God bless, and with all God's help, I'll see you all on Monday. Take care, guys.